Greenlane is a technology and systems provider of biogas to renewable natural gas systems, with sales of 355 systems into 28 countries globally. CEO Brad Douville is here to tell us the Greenlane story and the profitable, fast-growing opportunities for the company. I'm Martin Gagel with Market Radius Research. This is neither a recommendation nor investment advice. We're here to learn about the company. Brad, welcome back. It's great to see you. It's been way too long since we've last had you here.
It's been far too long, Martin. So thanks for having us back. And yeah, delighted to be here today.
Yeah, when you first joined, you were actually one of my very first interviews. So I appreciate that at the time. A great story. And lots happened over the last 4.5 years. So why don't you take it away and tell us what you've been up to?
Yeah, quite a bit. We've been up to an awful lot. So yeah, let's just do a quick update for folks on the company. It's probably been some time since some of your audience has taken a look, but yeah, let's get into it. Probably a few forward-looking statements, so take caution. Um, so just at the top level, so as you said in your introductory remarks, Greenlane is a leading technology provider of biogas desulfurization and upgrading systems. The systems that we supply, they transform biogas that's generated from organic waste from a number of different sources into high-value, grid-compliant, renewable natural gas, also referred to as biomethane in places outside of North America. I'll come back and I'll give a bit of a better view on how we fit into the ecosystem. But let's start with some highlights, Greenlane by the numbers, if you will. So the market that we participate in, think of that as a global market of biomethane that's growing, production volumes of biomethane growing at 15%. They've been growing at 15% over the last number of years, and then are projected to keep growing at around 15% for the next decade. So that's in aggregate of the industry. And the growth of biomethane is correlative to the growth of biogas upgrading systems that are needed to create that growth. So that's what we use as a proxy to represent the industry growth that we sit in. So, I mean, obviously, there's not a ton of industries that have consistent 15% growth over a decade. So that's a really important piece to start off with. And also, as you mentioned, we've sold over 350 systems, 355 systems into 28 countries. Just so happens that 12 of those countries, we were the first to provide biogas upgrading systems into. So we've been a real pioneer over our history. And we've been doing this for 35 years. And the company's really prided itself on solving the industry's most challenging problems. And I'll come back and comment on more specifically the problems that we're focused on right now, because that's important from where we've come from and where we're going. We have a global workforce of around 100 people, headquarters in Vancouver, Canada. We have a factory in Italy. We have office in Sao Paulo, Brazil, and then other people spread throughout the US and Europe. And one of the big focuses for 2025 has been advancing the state of the art of technology in our industry. That's including a number of patents, which again, I'll come back to, that we filed over the last 12 months. From a financial perspective, we have no debt, solid cash balance, and with a real focus of financial discipline, with a relentless focus on improving adjusted EBITDA and maintaining healthy cash reserves. And again, I'll come back and expand on all of that. So first, to set the stage, just to describe or give a view as to how our business is set up from a segment perspective. So what we're looking at here is full year 2024 results, just to give you an impression as the percentages, and also to give you a backdrop for our strategy. So the easiest pie slices to look at are the smaller ones first. So if you see that the parts and service, which is the gold color, the gross margin is on the right, revenue on the left. So you can see some outsized contribution of gross margin relative to revenue for both the parts and service and the royalty segments. So basically 30% gross margin contribution of parts and service with a 15% revenue contribution, same ratio for royalty. And then the rest is the system sales, which has been historically the bulk of our revenue. So that says that the most profitable segments of our business, parts and service, royalties, and then getting system sales to the same level of profitability is really the essence of our strategy. RNG. So let's maybe back up and say, well, what the heck is RNG anyway? Why does it matter? So think of RNG as a high value way that provides low carbon. So it's an essential tool to decarbonize the most difficult to decarbonize sectors of our global energy system. Think of RNG is to the gas grid as wind and solar are to the electricity grid. It's a drop-in fuel that's chemically identical to fossil natural gas, but it comes from renewable sources and therefore provides a carbon reduction or decarbonization. So transportation is where most of the volumes go today, and I'll come back and I'll explain a little bit why. And really in transportation, it's targeted towards Class 8 trucks, displacing diesel fuel. And that requires a natural gas engine. And the RNG goes right into these engines. And again, it behaves the same way as fossil natural gas would in these trucks. And there's a high proportion of RNG that's used in these trucks that are on the road today. And
Brad,
yeah,
sorry to interrupt. It's just a molecule of methane, right? Whether it's derived from hydrocarbon underground or whether it's from biowaste, it's the same methane molecule, right?
yeah, that's exactly right. So it's methane is the predominant constituent in both fossil gas and in RNG, and it's just where it comes from. So in the case of renewable natural gas, it comes from a renewable source, which means it adds no new net carbon to the atmosphere because it just ended up pulling out carbon to create that methane molecule. So that's really the carbon cycle and how that works. And then just to contextualize the transportation opportunity, I think it's generally considered that EVs are the future of light duty passenger car, but that's not really a viable technology for hauling heavy loads, Class 8 truck. So the really viable approach there is RNG, and RNG is pretty much the number one alternative to diesel fuel in that space. So that's why we see most of the RNG volumes going into transportation. So we've got utilities, we've got transportation, and finally industry. So any thermal needs that would otherwise use it could be natural gas, but it could be other fuels like propane. You can decarbonize an industrial application using RNG. There are several examples of this where the gas would be a small input in the overall value add, creating chemicals or goods or whatever. So it just makes it really quite easy for the company to implement their sustainability plans. So the ecosystem. So we're the bits in the middle. So we do the technology. It's the engineering rich portions of this. So it's biogas desulfurization and gas upgrading. I'll come back and just say a word on exactly what those things mean. On the left is the starting place. So it's a number of different biogas organic sources, organic waste sources. Starting at the bottom on the left, you see landfill. So that's really where the industry started. It's basically landfills that create the biogas, or from these other waste products. Then there's an intermediate step where the waste products have to go into a purpose-built anaerobic digester, and that then creates the biogas. So any organic matter decomposes without the presence of oxygen and creates biogas, which is a mixture mainly of carbon dioxide and methane, the methane molecule that we just talked about. And then the end sources, it's usually goes into the pipeline. And then once it's in the pipeline, it's typically used for vehicle fuel. So we tend to use mass balancing. It goes in one place and comes out a different place. And you consider that mass balance to accrue the environmental attributes resulting from the green molecules that are going in.
Brad, sorry, just to be super clarify, you sell the equipment to the system's operator. You're not the actual operator. You don't, those 355 systems, you're not operating them. You sell them, you give them service and support on an ongoing basis, or maybe some royalties you collect from them, but they're not your projects, correct?
Yeah, that's a really good point of clarity. So we sell to typically project developers. So the project developers, of course, are the inherently local activities that get the permits. They do the siting, they find the feedstock, they find the offtake. Those are our customers, and they're all over the place. They're global. And so our scale is providing the technology to those local parties that are doing that local work to get the projects off the ground. So our revenue sources come from the sales, predominantly our revenue sources come from the sales of equipment. And then as that pie chart I showed, also from sales and service. And then we have a unique part of the business, which is royalty, which I'll speak about in a moment. Okay, so the market. So we have this is the 15% per year globally over the next decade that I talked about. These projections come from the EIA, which I've used their data and their projections for a long, long time. They tend to do a pretty good job and a very thorough job. They have the chart here just shows a couple different projections. So one is more conservative, one is a bit more optimistic, and really the 15% comes from the more conservative view. So there is some upside in this. But basically, the way the market splits out is it's mostly Europe, North America, and rest of world is the way to think about it. Europe is predominantly an anaerobic digester kind of market. There are landfills, but it's really dominated by anaerobic digestion on that prior chart I showed. The difference is in the US market, about 70% of the RNG is derived from landfill sources. So that drives the difference. The reason that matters is because that depends on the technology. And I'll come back to the technologies that we're working on there.
And sorry, just going to jump in for extra clarification. Anaerobic digestion is used with like bio waste, like cow manure and other sort of organic materials, as opposed to just sucking it off of a big mixed use landfill.
That's exactly right. So this chart on the left side here, you can see the various feedstock sources. So whether it be manure or ethanol byproducts or food waste that gets collected in a green bin or wastewater sludge that's produced at a wastewater treatment plant, all of those things have to go into a purpose-built anaerobic digester. 15% globally, and then if we look at Brazil, Brazil's a unique case. It has probably the biggest agribusiness industry of any country, and awakening the green giant that really comes directly out of the IEA report. And I think it's true. I spend personally a lot of time in Brazil, and we were the first to provide an upgrader into the country about 10 years ago, and it's been a real focus for us. We've been the market leader. And we're working very, very hard to maintain our leadership there for all the right reasons, because this market has really awoken. It started doing landfill gas to power projects. So basically taking that landfill gas, putting it in engines, creating green electrons. But now it's really flipping into creating biomethane. And we sell the systems to be able to do that. And the market's really taken off. And IEA is projecting a sevenfold increase in demand by 2035. So that's one of our key focus areas. The systems that we provide, we've tried to keep it simple. Greenlane is unique in the space where, for a number of reasons. So we're really the only public company that's a technology provider and system provider in the space as it relates to biogas upgrading and desulfurization. And what we've done is we've also been the only company in the space to be 100% focused on the biogas industry. Many of our competitors have core technologies that they use in adjacent industries. But because we're entirely focused, we live or die by the renewable natural gas space, is we felt strategically that we wanted to bring to the space the most compelling technologies, not just one or two. So what we've done more recently, really starting at the beginning of 2025, is we got really tight on the products that we wanted to offer. Cascade LF is a brand new product for us, and I'll get into, we actually just launched it in September to the market. We revealed it, and I'll come back and describe that a little bit more, but the problem area that's focused on solving in the industry. Cascade MS is a derivative of Cascade LF, so it has deliberate shared components and parts with the Cascade LF product. MS stands for membrane separation. Cascade Water, or Cascade H2O, is our water wash technology. That's the foundational technology upon which Greenlane was formed 35 years ago. And there's really only a few number of ways to do this upgrading process, but I'll get into it. And then finally, our Cascade H2S, which is our biogas desulfurization product line, and that's what we make in Italy. As I mentioned, so in addition to the core business being system sales, parts and service is an important part of the business. We don't operate, to your earlier point, Martin, we don't operate the equipment, but we provide service. We do that either on an ad hoc basis or more preferably, we sign service contracts. And then the royalty part of the business, which I want to talk a little bit about, and that's relevant from our most recent Q2 results, is in Brazil. So we have a local partner in Brazil who's working on the sugar mill space. So we talked about the landfill space being the dominant sector today in Brazil, but there are 400 sugar mills in Brazil. This sector is poised to dwarf the biomethane production that is possible out of landfills in Brazil. The waste product that is coming from the ethanol process, it's called vinasse. It's a great biomethane feedstock source. There's a number of parties that are working on it, including our local partner. We license to them for local production in Brazil of that product, which is circled on the upper image on the right. And you can see what a bunch of other things that are going on in this space. The big, long black thing, that's a lagoon digester. That's the digester that's making the biogas that then gets upgraded by the Greenlane equipment that's produced locally under license. So that's what it comes to, and I'll explain a little bit as to the consequence of the royalty for so far for 2025. Our strategy, now this is really important. So if you think about, Greenlane as a technology company in our industry, for us to be successful, we have to do four main things. So one is price and performance. We have to continue to move the bounds on providing the best price and the best performance of our products. Otherwise, what good are we? Why are we here? Manufacturing, we have to be able to have control over our manufacturing costs and being able to deliver to the market. IP is an essential part of this. Hence why you would have seen from us a number of announcements on filing new patents that we've actually turned into our Cascade LF product line. So we've implemented the new innovations that we've made right away into these new products. And then finally, partnerships. There's a complex value chain. We work with partners, including construction partners and finance partners. So there's a whole bunch of other pieces that we are the critical mass to kind of really pull that together to deliver these systems to enable our customers, the project developers, to be successful. Okay, so the problems that need solving in the industry. So I showed you the two kinds of biogas. So one is coming from anaerobic digesters. That's AD gas on the left, and then landfill gas on the right. And they're very different in composition. AD gas is predominantly a mixture of methane and carbon dioxide, but also it has every single biogas project, whether it comes from digesters or landfill gas, has hydrogen sulfide. The hydrogen sulfide in a digester tends to be much higher. So the problem we're trying to solve here is desulfurization. To be honest, the industry has evolved quite rapidly over the last, I'd say, 5 years and has become very efficient at the equipment that separates carbon dioxide from methane. So from a Greenlane strategic perspective, yes, we offer those pieces of equipment, but it's high competition. The area that has multiple different technical solutions, which, by the way, is evidence that the industry hasn't chosen its preferred approach, is desulfurization. So we make this product in Italy. It's basically become the de facto standard in Italy. We're taking it through Europe, and then we're taking it to the Americas. So we think it actually, we believe that it can become the de facto standard in the Americas and globally. So that's why we're really excited by this product line for us, which, by the way, has been in production for about 13 years now. The other important thing to note here, the distinction between digester gas and landfill gas, is that in that separation process, you lose a little bit of methane. In the case of digester gas, methane recovery, or flipped around, is the loss, which would be 0.5% a loss, or methane recovery. You recover 99.5% of the methane that goes in, comes out. That's just simply not the case with landfill gas. So that's a big, big problem in our industry, is that we haven't really seen, the same way we've seen solar panels and EV batteries come down the cost curve and go up the performance curve. We haven't really seen that same dynamic with landfill gas upgrading. Today's state of the technology is that you'll pay basically double for the same flow rate of gas processing, landfill gas versus digester gas. And it'll get much worse methane recovery. It could be down to 80%. So imagine that you're losing 20% of the inlet methane isn't ending up in your product gas. So that's our view, is that that's an unacceptable equation for customers, and we can do better as an industry. So that's really where we've leaned in. We started internal work on this nearly 2 years ago. We started developing patents, which we started filing within the last 12 months. And we just did our market launch in September of this product, and are out with customers now and proposing and putting proposals together. We'll start with production of this product in Brazil, followed up by production for the North American market. Okay, and then the strategic initiatives that we have. So now that I've explained the problem areas, our product line, what we're trying to do, and our strategic imperatives for the business. So our strategy is really quite simple. So step one is continued sales growth of the most profitable segments of our business, which is parts and service, biogas desulfurization, and technology licensing. Part two of the strategy is to improve profitability of our core upgrading systems. And you really need to think of 2025 as a reset year for the core upgrading system business, because we've been switching to Cascade LF, which is pillar 3 of our strategy, is launch this product, make sure it's compelling, has best price performance, and we are advancing the state of the art. So that's our ambition. And really to use Cascade LF to get us back on a revenue growth trajectory. So the results, as I mentioned, we've been relentlessly focused on improving adjusted EBITDA. So we've grown very quickly in the business. We had a moderation of sales. As I mentioned, we've had a reset period to retool and come back with a more compelling upgrading business, switch away from upgrading of digester gas and switch into, or lean into, upgrading of landfill gas, while relying on those most profitable sectors of our business. So we started to see some good positive results of that. So in Q2, you can see there the upward bar. It's two pieces. So firstly, the foundation is $500,000 of adjusted EBITDA, which that's removing a one-time contribution from the royalty revenue that I mentioned. So the royalty associated with the license in Brazil. That was a bit of a windfall in Q2. But if you separate that windfall, which is $2.9 million contribution to EBITDA, then we still had the adjusted positive EBITDA, which we're really proud of, and that's what we've been working towards. So think of Q2 as a one-time, and that one-time, by the way, came from a 2-year minimum volume commitment that came due in Q2 of 2025, and then going forward, there'll be more regular royalty contributions coming out of that. Maintaining healthy cash reserves is another key focus for our financial rigor in the business. So you can see we've been hyper-focused on maintaining the right cash position at the end of the quarter. It's been pretty consistent, and that's really indicative of the fact that we've got the cash that we need in the business. We're not consuming cash as we continue down our path of implementation of our strategic plan. Just very quickly, 150,000 million shares outstanding, about 9% inside ownership, widely held. Again, no debt and a good cash position. Seasoned management team. Get into any questions there. And then just last slide, very quickly recap. So we're in a market that's growing at 15% CAGR over the next decade, which is really exciting for us. Brazil is really the big upside market for us that we're very focused. We're the market leader. Remember to think of RNG as the essential tool to decarbonize the most difficult to decarbonize sectors. I failed to mention, I'll mention it now, that the amount of gas that's the gas system, energy system, is bigger than the electricity energy system. So think about the magnitude of the problem that we're trying to solve here. It's enormous, and all the focus goes to solar and wind. Greenlane has a proven track record. We've been at this for 35 years. We have a pipeline of advanced products that are serving the highest demand areas and the fastest growing markets. And our financial discipline, I think we're starting to see some really positive results from that. That's it. Last slide.
All right. Excellent. Thank you. Brad, you or Greenlane was one of the darlings of the COVID green tech bubble 4 or 5 years ago. And looking at the Greenlane stock chart, it's quite a remarkable one. Just a huge peak and then a slow decline, and looks like we've sort of bounced off the bottom here. It was just you were caught up in a great market back then. Could you just give us a quick history of you've reshifted or realigned your business? What are some of the things or the major things that have changed over those 4 or 5 years? And I guess also what hasn't changed of your core technology? Like you talk about your desulfurization, that's an acquisition you made, I think, in 2021. So you've really added on some of that core technology where I believe they were a partner beforehand and now they're you. So can you just give a quick run through on like how is Greenlane different today than it was previously?
Yeah, so obviously we were caught up with the sectoral focus on back then it was called ESG, and I don't think anyone uses that term anymore or likes that term.
Yeah.
There was certainly enthusiasm, that really fed into the space, looking to deploy large amounts of capital. So we got caught up in that, and it was helpful. So we raised a bit of money. That was in part allowed us to do this wonderful acquisition of this business in Italy. We did that 3.5 years ago. That's turned out to be a really great part of our portfolio. So things have obviously come off in the space in terms of investor enthusiasm. And most of that investor enthusiasm has been investing in projects themselves and owning the projects. But in the meantime, we've continued to do our thing. And when people become more rational with their investments, that means there needs to be more of a focus on asset optimization. And part of asset optimization really comes back to a real clear focus on the technology. So it's got to be higher performance, it's got to be lower cost, it's got to lower the bars to entry for our customers, the project developers. And that's what we've been focused on. So our biogas desulfurization product has really done that. That part of our business is growing very nicely, continuing to contribute to our sales order backlog. And then right now with this, it's to be honest, been a perfect time to, while the market's been looking elsewhere, is to focus and develop our next generation landfill gas upgrading product. We're getting some great feedback on that right now, especially as the market in Brazil takes off. I think the market in the US right now, it's clearly in a bit of it's a less energetic market than it was in prior times. I think this year, of course, with chaos and tariffs and uncertain costs for developing projects, that will take care of itself. So there really wasn't a better timing for us to do a reset and focus on development of our next gen product because we'll catch that next wave of development in the US.
All right. With the projects, is your projects are doing two things. Either, and this is, I think, I'm pretty sure I remember this from our first interview, is when methane goes into the atmosphere, it's 10 times as destructive as CO2, as it's got a bit of a life cycle. I believe, am I right on that?
It's 28 times with
All
a
right.
100-year window. It's 80 times with a 20-year window. So it's this complex thing. But yes, think of it as it's you got to get it out. You preferentially want to focus on CO2, but if you can have, it's really called methane avoidance, is the lingo in the industry. If you're avoiding methane, raw methane from entering the atmosphere, then that's where you get the highly carbon negative attributes of RNG. So we didn't actually even talk about that, but for example, if you use something like dairy manure, which is otherwise releasing raw methane into the atmosphere, you get these what's referred to as a carbon intensity score of minus 300 or minus 400. And you go, well, how can it be minus? That's crazy. I thought we just get to zero. But the way you get below zero is by methane avoidance. So it's effectively, if a diesel truck is at plus 100 and you're at minus 300, well, that's a 4x improvement in the carbon intensity. So your negative carbon, it's the same as if you're pulling carbon out of the atmosphere.
With the economics of these projects, is it all based, is it relying on government subsidies or carbon credits? Or because you're doing two things, keeping methane out of the atmosphere, but you're creating a valuable methane that gets burned and used and not dumped into the atmosphere. Does it require carbon credits or government subsidies, or is it just standalone positive economics? Let's say like solar is now solar so effective and efficient that it doesn't even need credits to be very competitive.
Yeah, so the way that the biomethane or RNG industry works, certainly in the US and in Europe, is again, it's been targeted at the most difficult to decarbonize sectors. So think of transportation as the number one. Like that is by far the most difficult to decarbonize, especially the heavy goods vehicles. And so there is a reliance in the US on two main things. So one is the renewable fuel standard at the federal level. And then on certain states, which would include California, California, Oregon, Washington, and also New Mexico, they all have low carbon fuel standard programs in place, which both at the federal level and at the state level are intended to decarbonize the grid. The net result is that it creates a fungible credit trading market. It's not solely for RNG, it's for any decarbonizing technology. It just so happens that RNG provides the biggest bang for the buck. It's the most attractive and tends to do really well, yeah, in these markets. And that's why today in the US, we see 90% of the RNG volumes going to transportation is because of those programs. Europe has a similar program. It's got different mechanisms, as you can imagine. But those things create high value for RNG, and that provides the business case for developers to invest in the projects and get the resulting revenue from selling RNG. So just to give you some figures, the value of the RNG could be, anywhere from say $30 per MMBTU to maybe $50 per MMBTU. Of course, the changes based on the credit value, what the trading price is, and that compares to Henry Hub at like $3. So it's a significant uplift, but it all makes sense in the context of these regulatory frameworks, which create a market, a fungible market for the carbon credits.
And you were saying California as well. So it's not just a federal mandate. Different states have, and then as well, different countries around the world have their own similar mandates. So it's not like, let's say, a federal change of policy would impact the whole United States because California does its own thing.
Yeah, and this question comes up a lot, but the renewable fuel standard, which is at the US federal level, that's been in place and it was part of the 2005 Energy Act. So it's been there a long, long time. It's not going anywhere. It's codified. So that continues to be a very strong component of the marketplace for RNG. And then the existing programs in the West Coast states, there's other states that are looking to put their own programs in place. So there's many more states to go.
All right. I don't think I quite got it. Probably the audience was able to pick it up better than me. But you are moving from your market focus is moving from landfill gas to AD gas, or is it the other way around? And that's because of the methane that isn't able to get captured. Could you just clarify that if I got any of that right?
Yeah. So put back this slide here, which is the distinction between AD gas and landfill gas. And so what I was saying earlier was, well, firstly, Greenlane's history has been upgrading of biogas no matter what the source is. And so we continue to do that. But we're always going to lean into those areas of the market where we can provide the most difference, we can provide the most compelling products and differentiate ourselves. That's kind of, obviously strategy 101. So in the case of biogas upgrading and the being a technology provider, if we look at the landscape, the highest competition area in the industry is doing gas upgrading for anaerobic digester gas. So that's the process of just separating carbon dioxide from methane from anaerobic digester gas. It's relatively easy, I'd say. There's a lot of people that can do it. So therefore, relatively low barriers to entry and a lot of competitors. We still do that, but that's not really going to be a recipe for success for us as a business if that's all we did. So our key focus areas are to do the difficult things that there's fewer competitors. And those two difficult things are biogas desulfurization. That's a really hard thing to do in the industry. That's our Italian product. And then separately is our new Cascade LF product line, which does the difficult job of separating nitrogen and oxygen from methane, which is where you get all these losses and have high cost systems. So with our new technology that we've been patenting over the last 12 months, including just 2 weeks ago, I guess it was, that we announced our latest round of filings, which was our next generation, what we call a linear NRU, nitrogen rejection unit. Um, that sets us on a trajectory of really moving the bar in the industry of having a lower cost system with much better performance. So we're really aiming to replicate the kind of methane recovery that we see today in digester gas, this 99.5%. Our ambition is to reach those lofty levels, albeit probably in stages of, growing amounts of nitrogen become more and more difficult. But if we can achieve those kind of levels of performance at a good price, that is going to be a game changer in this industry. And remember, in the US today, 70% of the RNG is derived from landfills. It's been a big sector of the market. It's going to continue to be a big sector of the market. And it is today the main sector in the Brazilian market, which is just set off this growth trajectory. So that's why we're leaning into next generation landfill gas upgrading and also this biogas desulfurization sector.
Gotcha. Okay, so you've got a better competitive advantage there and better room to improve I guess, what the industry standards are right now.
Right, exactly.
All right. Can you talk about either I don't know there are always lots of ways to slice this up, but what is your kind of market share in the industry? And I presume different regions are different, or landfill versus AD markets are different. But can you give us a bit of a sense of how you stand globally or in specific markets?
Yeah, so let's start with well, firstly, the data is not as transparent as in other markets we'd like, so we do have to make some estimates and some guesses. and just knowing kind of what's generally going on. But if we start with our biogas desulfurization, we have an extremely high market share in Italy with that product. I'd be surprised if we were less than 90% market share, to be honest there. It's just that compelling of a product, and our team there has done an amazing job of getting all the right relationships with all the key players. And as I mentioned, that product is going into Europe. We've been selling into Europe for a while. We're bringing it into the Americas now. It's early days for that part, but our ambition with that part of the business is to replicate the kind of success that we've seen in Italy because we think it can become the de facto standard for biogas desulfurization. So that's the desulfurization product line. As I mentioned and then there's two other segments. So one would be biogas upgrading and digester gas. That is a highly competitive market. There's lots of competitors. So call it low market share. Everyone has low market share because there's just so many competitors in it. So that's not a super interesting segment for us. And then for landfill gas, I think the way to think about it is um, there's lots of projects in the US. I think we have to think about this going forward. And so what will our market share be as we start to sell this brand new Cascade LF product? And if we are successful in achieving or advancing the state of the art in the industry, so in other words, coming down the cost curve, going up the performance curve, getting that enabling more and more projects to be economical for project developers than would otherwise have been if these technology enhancements hadn't been made, then I think it's fair to say we are going to enjoy an outsized market share with Cascade LF. That's what we set our sights on doing, solving these big problems such that we would enable more projects and end up having more project developers come to Greenlane to solve their problems.
All right. How many other, like, are there like a handful, half a dozen or a dozen or just two or three of bigger companies that you keep bumping against, or is it just really a whole hodgepodge of different companies appearing in for different projects?
Yeah, again, it's back to the sectors. So starting with gas separation or the gas upgrading in anaerobic digester gas, like there's many, there's many
Okay.
competitors. In the case of H2S removal or desulfurization, there's it's even tougher to follow because there's different technological approaches. Like sometimes it's not even a post-processing, sometimes it's ahead of the digester, sometimes it's in the digester. But in terms of this specific kind of technology that we do, there's only, maybe, you can count on one hand the types of competitors we might find. And then finally, in the landfill gas upgrading, at least the people that are really good at it, you can count, maybe really two or three key competitors, and it is regional.
I'm curious with desulfurization, that in some like oil and gas industry sectors, that's a problem as well. And I don't know, maybe it's an issue elsewhere. Would you have any opportunities with your technology in non-biogas industries potentially?
Potentially with our brand new linear NRU that we just launched last month. So as we got into that, as we really focused on this problem of separating nitrogen from methane, the technology that we have patented for that, we think might lend itself to other sectors. So right now, like it's a gas separation problem and how you do that. So some of these things will apply. So that's something that we'll park for now, but that's something we might be looking at. But back to your first question on biogas desulfurization or desulfurization more generally, the oil and gas space operates at much, much higher pressures. And to be honest, this is one of the keys to success with this product line out of Italy. It started 13 years ago in biogas. It wasn't born out of oil and gas, which a lot of our competitors were. So that's partly why we're so compelling from a price and performance perspective, is because the competitors that we do have, they've designed systems that are designed for the kinds of pressures that we see in oil and gas. We just simply don't have those pressures in biogas. So that that says that we've chosen from the start the right kind of materials that cost optimize this product. And that's really been the secret to our success as to why this product has been so compelling. It's been specifically designed for biogas. So it would be a different product line if we were to go after the oil and gas market.
All right. Changing topics here on your manufacturing, you've got the desulfurization manufacturing facility in Italy, but your other systems, if I remember correctly, previously, you did a lot of outsourcing, maybe even to local partners. Could you talk about how your manufacturing works, and especially in this world of we're not worrying about supply chains, COVID supply chains, now we're worried about tariffs, supply chains. How does your strategy fit in all of this? And is it sort of an advantage, or what kind of challenges are there?
Yeah, so I've said it a few times, but 2025 is a reset year for us, and part of that reset is we're changing the business model from how we've made and produced our upgrading systems to how we will make them going forward. So obviously, we've got a new reality of tariffs in the U.S. that we didn't have before. In places like Brazil, they've always had a strong tariff regime, and that's going to continue going forward. So in the past, as you've noted, related to the upgrading, we've tended to do two things. We have a global supply chain for components, but then one or two select partners at the module level, so skidded or containerized equipment that we would work with. But we're changing that model. So we're basically going forward with Cascade LF and Cascade MS is going to be Greenlane manufacturing. That's deliberate. The first setup is Brazil because that's the market that we're going after. And you have to be local. So if you're local content in Brazil, then you do a couple things. Not only do you avoid the tariffs, you have to hit a threshold. It's roughly 50%. And if you're under that threshold, then at the system level, you're not paying the tariffs. Um, but we also make our customers, we enable our customers because then they get access to lower cost financing from BNDES, the National Bank of Brazil. So that's a really important feature. That's almost an essential feature to compete in the market. So that's really why we have our own manufacturing to localize not only the final fabrication step, but also the supply chain. And then we'll have to replicate that for the North American supply as well. So in addition to the tariff avoidance, having the local manufacturing for ourselves obviously means we can maximize margins and make sure that we can control quality and also the IP related aspects with manufacturing.
All right. How long do you think this will take to implement the strategy? And is it going to affect your balance sheet or your quarterly financial statements as you change the structure of manufacturing and the supply chain?
Yeah, not really. So this isn't like we have to outfit a factory with millions of dollars of capital equipment. That's not really how this works. So it's really an overhead crane with some assembly tools. The supply chain structure is such that we have any sort of metalworks, welding, all that would be in our supply chain partners. And then the final assembly and test happens within our own factory. So that's really the cost structure. So it's not a big cash pull on this, to be honest. In terms of timing, right now, as I mentioned, Brazil is our launch market, and we expect to be having the first products roll off the end of the line before the end of next year.
Your last quarter was great. There were some, I don't know, call it one time or special positive impacts on the quarter. Going forward, like even when you X'd out those ones, you EBITDA positive and things definitely going in the right direction. What kind of guidance can you give investors for maybe not specifically, but trajectory? Are things going to be really lumpy, or look at your backlog and what can we extrapolate that? Uh, like just so people have some sense of what coming quarters can look like if you're not giving specific guidance.
Yeah, well, that's right. We don't give specific guidance, but I think what investors can look at is we've been very clear on what our strategy is and why. So if you look back and look at some prior quarters backlog, it's been growing at a nice healthy pace. But also remember, again, 2025 is a reset year for us for our core upgrading business. So the foundation is to be able to build on a steady growth of a parts and service business, on a steady growth of biogas desulfurization business, which is buried in our systems business. And then also the royalty components. So those are all profitable segments of our business that we're layering, that we're focused on, and that's to build the foundation. And then the big growth possibility in the business is really the upgraders themselves, which is largely going to be our Cascade LF product. So that, like I said, we just revealed it, so it's not yet in production. It will be in production next year. So if we're able to build on that foundation, both from a revenue and a profitability perspective going forward, then that's what investors should look at. Seeing, contract wins for Cascade LF will be an indicator of our future growth. And I think really just looking at the foundational principles of our strategy. Again, it's that foundation of those three pieces of the business that are, kind of steady growth, profitable, and then the big getting back on the growth trajectory is Cascade LF sales.
With the Cascade LF, I'm getting the sense that you expect that to have higher margins as well?
It's got higher revenue. So
Okay.
yeah, so I mean that's I guess that's the missing piece. So think of every time we do a parts and service, that's relatively low revenue, but good profitability. Whenever we do a system sale for biogas desulfurization, just to give you an order of magnitude, that might be somewhere between, say, 100,000, 500,000 might be a contract value for a single individual contract for those, and there's many of those. But then when we sell a Cascade LF, think of that on the order of 5 million, something like that. So it's kind of 10x the value of a biogas desulfurization. So given the uniqueness of this product, given that we'll have inside manufacturing, given that we're going to set ourselves apart from the competition, that should allow us to be pretty good margins. That's what we're trying to do with this product, is to establish healthy gross margins. But with a much bigger contract value, then that's where the growth comes from in the business, both obviously the top line, but also the bottom line.
Okay, so some improvement in the gross percentage margin, but the absolute gross profit should be bigger because the revenues are bigger, and that'll help with your G&A and everything below the gross margin line, and so you've got more gross profit to hit the bottom line.
Exactly. Yeah, exactly.
All right. All right. Okay. We've got some questions from the audience here. Your plans for your large cash balance, share buyback programs, or what are some other opportunities just to build up inventory for your cash balance? Can you talk about the use of that?
Yeah, I mean the main part, I mean, it's you always want to maintain cash balance, right? So our ambition was not to be in a cash deficit position in the business. We don't want to take on debt if we don't need to. So that gives us flexibility. We want to have at any given time the necessary flexibility, whether it be for purchasing some inventory. Inventory is a great use of those, portion of those proceeds.
Yeah.
That is a point of competition in industry. If we can find ways to have shorter lead times, and that's helpful. We've got some cash to deploy towards that. Um, and then, in the event that the forecasts don't turn out, we've got some cash. We don't want to ever be in a position where we're forced to get cash. So that's really how we're thinking about the cash balance, is we want to maintain a nice, healthy reserve, give us optionality in the business to do what we want to do versus be in a position of having to do things because we need to.
There's a question here on your royalty agreement with ZEG in Brazil. Can you just little dig into exactly, you got some, I guess these were upfront payments, and then what do royalties look like? They're just based on individual unit sales. Just unpack that a little bit, please.
Yeah, that's right. So royalty is kind of by definition on a per unit basis. And so the press release we issued 2 and a bit years ago. We did get into a little bit of the details. So again, there's 400 sugar mills in Brazil. We set an ambition together with ZEG, our partner, of 75 of those. Says, okay, well, that seems reasonable. I think at the time we said 5 years. Within 5 years, we'd reach that. It's very fair to say that it's going to take longer than that. But that's okay. I mean, that's normal. That's the way these industries go. Any industry that's going to be as significant and large as this one will take a little bit of time to build out, but the promise and the potential is certainly there. So the royalty is very simply, it's a percent of on a unit per unit basis. It's an amount that we get, and that really comes from the fact that we license the technology. Greenlane retains the technical responsibility for the product, and the local partner produces it and sells it into projects like what we're looking at on the screen here.
With the LF product, when you announce a contract win or your backlog, can you give any sense of from contact, like in your revenues, is it partially completed basis or when you install it, or like what is the lag time from win to revenue and cash in that?
Yeah, great question. So the revenue recognition for a biogas upgrading system, typically we see that happen over maybe an 18-month to 24-month time frame. It depends on the project scope and what's happening. And it's a percent completion basis is how we do it. So once we sign the contract, then almost immediately there'll be an amount that gets recognized on a quarter by quarter basis, depending on how the project's proceeding.
Okay, but and the good thing on that, I guess, is it lowers the lumpiness. If you just got collected the revenues on one big dump at the end, revenues could be swinging over. If you've got a dozen projects in the pipeline, would one expect to things be relatively consistent?
Yeah, so there's an inherent smoothing there, but where there is some lumpiness is the timing of new contract wins, right? So that's been always something very difficult to project in our business because there's externalities to Greenlane that reside in our customers. So whether it's permitting, maybe they got a permitting delay, maybe they had a delay in their financing, maybe they had a pull-up in those things. But that becomes where things get lumpy in Greenlane's business, is just the timing of those big orders. So again, I want to reemphasize the foundational strategic model, which is these elements of our business that are more smooth, like parts and sales, like our biogas desulfurization. The biogas desulfurization part of the business is smoother because it's relatively high volume of a smaller contract value. So it kind of has a bit of an inherent smoothing effect. The royalties that'll be a bit lumpy, but the value's kind of small relative to those other parts. And then the contract value, because it's 10x a contract value for a full biogas upgrader, Cascade LF, then that's where we'll start to see, perhaps some lumpiness. But as long as it's lumpy heading in the upward direction, we don't mind.
And we are at an hour here. That was great. One last question from the audience. Do you have any business in Finland?
That's very specific. We have in the past, we've done actually a lot of business in Finland. That was one of our first markets in the 90s, which wow, that's a long time ago. We've done business more recently in Finland. And right now, the European market is really where we're leaning in with our biogas desulfurization product, given that it's largely a anaerobic digester market.
All right. Brad, any final thoughts or comments you want to leave viewers and investors with before we wrap it up?
Well, I think we've covered a good amount. You've had some really good questions, including questions from the audience. So, I think I just want to leave the final word that I think we're heading in the right direction from the strategy that I laid out at the beginning of this year for our shareholders. We're pleased with the progress we're making. We're not there yet. We're continuing to work very hard to get us where we ultimately want to see and exploit the full value that this market holds for us.
Brad, thanks a lot. Appreciate it. Hope it's not another 4+ years till we talk again. Thank you.
Yeah, certainly not. Thank you,
All
Martin.
right. Cheers.